the owner of America's only domestic source of rare earth, announcing an agreement to merge with Fortress Value Acquisition Corporation. It's a SPAC, one of these special purpose acquisition companies sponsored by Fortress Investment Group. Upon completion, the company MP Materials will remain listed on the New York Stock Exchange under the ticker MP. Joining us right now for a first on CNBC interview is the chairman and CEO of that company, Jim Litinsky. Good morning to you, Jim. Nice to see you. Congratulations
good morning,
on the
Andrew.
transaction.
Great to see you all. Thank you. Thank you.
There's two components of this deal I want to talk about. One is the geopolitical one, and the other is just the number of SPACs that we've seen, which raises the following question. Why couldn't have you sought to go public through the normal sort of channels rather than go the SPAC route, given that typically in most SPACs, the cost of what you have to give over to the sponsor of the SPAC is high?
Sure. Well, so good morning. And you know, obviously everybody at MP Materials is very excited today, but I think everybody in the country should also be excited because today is, a great day for all of us. Given everything we've learned from Corona these last few months, supply chain resiliency is critical for all of us. And I hope that this is the first of capital. We hope we're the first of many for capital formation around the idea of bringing home some of our critical supply chain and as much of our supply chain as we can. We really sit at the crossroads of both that movement as well as the electrification movement, and we can get into that. But to answer your question on the SPAC, we considered a lot of options, in particular an IPO. And what I would tell you is, first and foremost, I have to give a strong thank you to Drew McKnight and his team at Fortress. They were outstanding partners. This was a case where, I went into it skeptical as well, given that there is sort of a sordid history of SPACs kind of going back a decade. But they were sort of committed long-term partners from the beginning, and the process was obvious as it unfolded that they were the right partner for us for a number of reasons. But I also think that the SPAC landscape has completely changed. I think it's not a perfect analogy. It's not a great analogy, but if you think about high yield bonds, they were once junk bonds, and in the 1970s that was sort of a sordid space. And SPACs, although they can be expensive, they really actually are in today's capital market a way to efficiently and quickly form capital with institutional investors on the one hand, actually getting a lot of transparency to understand the nature of what they're investing in, and really kind of properly pricing these deals and giving management teams, particularly in growth spaces, certainty as far as valuation and some of the dynamics of the transaction. So I actually think that this is, I think that SPACs are going to kind of continue to grow, take over the landscape quite a bit more. And in particular in the electrification space, which is, we believe we can get into that, but we believe we're sort of the picks and shovels play of the electrification boom. You're going to see a lot more of these SPACs, and there'll be some that are successful and some that aren't. But it actually really makes a lot of sense for capital to form around growth.